Hello students, my name is Krumal Patel and welcome to Sri Jaindra's Rank Zone classes. I am your friend as well as mentor for the classes with respect to paper 4 of CA Foundation course, that is Economics. We had started chapter 1 of part 1 of Economics, that is Business Economics, and chapter 1 which deals with the nature and scope of business economics. We have already discussed in the previous session definition of business economics, scope of business economics, nature of business economics, and last part left out of unit 1 is basic economic problem or issue with respect to microeconomics and problem and issue with respect to macroeconomics. First of all, we started problem or issue with respect to microeconomics. First one is demand analysis and forecasting. Demand analysis pertains to the behavior of consumer. It pertains to behavior of consumer in the market. It studies the nature of consumer preferences and effect of changes in determinants of demand such as price of commodity, consumer's income, price of related commodities, consumer tastes and preferences, etc. So demand analysis deals with the behavior of consumer in the market and study with the nature of consumer preferences and effect of changes in determinants of the market. Further, demand forecasting is a technique of predicting future demand of goods and services on the basis of past behavior, and factor which affect the demand. Accurate forecasting is essential for the firm to enable it to produce the required quantity at the right time and to arrange well in advance for the various factors of production, that is raw material, labor, machine, equipment, buildings, etc. Business economics provides manager with the scientific tool which assist him in forecasting demand. So, issue with respect to microeconomics, under which first we have discussed demand analysis and forecasting, under which we have seen that demand analysis pertains to or deals with the behavior of consumer and is studied with the nature of consumer preferences and effect of change in the determinants of the demand. Demand forecasting is the technique of predicting future of demand of goods and services based on the past behavior. Accurate forecasting is essential to enable the firm to produce required quantity at the right time. Required quantity at the right time, that is right quantity at the right time, and well in advance arrange various factors of production, that is procurement of material, labors, machines, equipments, etc. Business economics provide the manager various scientific tools which assist him in forecasting demand. Second issue is production and cost analysis. Production theory explain the relationship between input and output. As business economists have to decide optimum size of output decide optimum size of output given the objective of the firm. He has also to ensure that firm is not incurring friends undue costs which are unavoidable in nature. Production analysis enables the firm to decide the choice of appropriate technology and selection of least cost input mix to achieve technically efficient way of producing output given the input. Whereas cost analysis enables firm to recognize behavior of cost when variables such as output, time period and size of plant change. Firm will be able to identify ways to maximize profit by producing the desired level of output at the minimum possible cost. Here friends, two analyses have been done. One is production analysis and second is cost analysis. First of all, production theory explains the relationship between input and output. Production analysis enables the firm to decide choice of appropriate technologies or choice of tools and selection of least cost input mix to achieve efficient way of producing output. Whereas cost analysis enables the firm to recognize the behavior of cost where variable are changes. That is, as for example, labor cost at production capacity of 50% and labor cost at production capacity of 80%. So there is a change between labor cost at 50% and 80%. So such change of labor cost has been analyzed under cost analysis tool. Next, inventory management. Inventory management theory pertain to rules that firm can use to minimize the cost associated with maintaining inventory in form of work in progress, raw material and finished good. Inventory policy affect the profitability of the firm. Business economists use methods such as ABC analysis, simplification exercise and mathematical models to help the firm maintain optimum stock of inventory. Here, inventory shall be managed in such a way that costs associated with the or holding costs associated with the maintenance of inventory in forms of work in progress, raw material and finished goods are to be minimized. Cost or amount blocked by purchasing excess material or producing excess finished good over and above demand, the firm has to bear holding cost of said inventory. In such a case, optimum stock of inventory has to be maintained by applying ABC analysis, simple simulation exercise and mathematical model to avoid cost associated with the maintenance of inventory. And market structure and pricing policies. Analysis of the structure of the market provides information about the nature and extent of competition which the firm has to face. This helps in determining the degree of manpower, degree of market power, ability to determine price which the firm commands and strategize to be followed in the market management under the given competitive condition. Price theory explains how prices are determined under different kind of market condition and assist the firm in framing suitable price policies. Here, market structure and pricing policy analysis of structure which provides information about the nature and extent of competition which the firm has to face. This helps in determining the degree of market and various commands and strategy to be followed in the market management to avoid or to reduce competitive or competition. Price theory explains how prices are determined under different kind of market condition and assist the firm in framing suitable pricing policy. Here price is to be considered as a target price. Price first of all has been determined according to the market. And resource allocation. Business economics with the help of advanced tool such as linear programming enables the firm to arrive the best course of action for optimum utilization of available resources. By applying various operational research techniques like linear programming, which enables the firm to find out the best course of action for optimum utilization of available resources, as available resources are scarce in nature and having a multiple use. Next is theory of capital and investment decision. For maximizing profit, the firm has to carefully evaluate the investment decision and carry out the sensible policy of capital allocation. Theory related to capital and investment provides scientific criteria for choice of investment project and assessment of efficiency of capital. Business economics support the decision making on allocation of scarce capital among competing use of funds. Theory of capital investment. Here some capital budgeting decision has been considered. As per example, firm has rupees 10 lakh to invest in capital intensive project to invest in acquiring capital asset, say fixed asset. Now for fixed asset, various companies quotation has been available or various company option have been available to the firm. Now firm has to make decision or firm has to carefully evaluate various proposals by all the companies to ensure that the decision made by the firm is to optimize profit, and decision taken by the firm at present will help it to in near future years. So firm has to carefully evaluate the investment decision and carry out a sensible policy of capital allocation. Another example is, if an individual have rupees 1 lakh in hand and he has some various investment proposal, like he has option to make fixed deposit of rupees 1 lakh, he has option to make invest of rupees 1 lakh in share markets. Third one is investment option of rupees 1 lakh to invest in mutual funds, or either any combination of each other. Now the person has to make carefully evaluation of its all the investment option by comparing and by evaluating return of investment and time value of money concept to determine which option will give his best or optimum outcome in terms of return or profits. Next, profit analysis. Profit are most often uncertain due to changing price and market condition. Profit theory guide the firm in the measurement and management of profit under the condition of uncertainty. Profit analysis is also immensely useful in future profit planning. Here, profit is mostly uncertain due to changes in prices and various market conditions. So profit theory guides the firm in measurement and management of profit under the condition of uncertainty, which is useful in future profit planning. Next is risk and uncertainty analysis. Business firms generally operate under a condition of risk and uncertainty. Analysis of risk and uncertainty helps the business. It helps the business firm in arriving at efficient decision and formulating plans and policy on the basis of past data, current information, and future prediction. Here, on the basis of past experience or past data and using the current information and some future prediction has been made, risk and uncertainty theories helps the business arriving the efficient decision. So, under microeconomics, various issue has been considered or helps the business manager to take various crucial decision. First one is demand analysis and forecasting. Second one is production and cost analysis, inventory management, and market structure and pricing policies. Resource allocation, then theory of capital and investment decision, profit analysis, risk and uncertainty analysis. Now, problem or issue with respect to macroeconomics. Environmental factors have significant influence upon the functioning and performance of the business. Major factors are related to type of economic system, whether type of economic system. Second one is stage of business cycle. Then general trend in national income, employment, price, saving and investment. Government's economic policy like industrial policy, competition policy, monetary and fiscal policy, pricing policy, foreign trade policy and globalization policy. Working of financial sector and capital market. Socio-economic organization like trade union, producer and consumer union and cooperative societies. Social and political environment. So, following these are the major macroeconomic factors which have significant influence upon the functioning and performance of business. Performance business depends on the economic system in which business firm runs their businesses. Stage of business cycle is also having significant influence on the functioning or performance of the business, whether there is an introduction stage, growth stage, maturity stage, decline stage, etc. So stage of business cycle is also having a significant influence on the functioning of the business. General trend in national income, employment, pricing, saving and investment across the country is also having significant influence on the profitability and functioning of the business. Government policy are heavily Government policies have heavily significant influence on the functioning, as government introduced various policy like industrial policy, competition, monetary, pricing, foreign trade, also set up various barriers for functioning of businesses, also implement various taxation policy, etc. So we can say that government's economic policies have significant influence upon the functioning and performance of the business. Working of financial and capital market. Working of financial and capital market across the country have and can make influence on the functioning and performance of the business. Business need various capital as well as working capital for the smoothing running of the business. So various policy and working of finance and capital market have heavily influence the functioning and need of the business. Socio-economic organization. Various trade union, producer, consumer union, cooperative society, which are known as socio-economic organization, introduce their various policies and standards, and the business or the firm have to comply with the said standard and policies. So it influences the business operation. And social and political environment. Social and political environment heavily influence the function, profitability, operation of the business. Sometimes some political pressure or social and political pressure significant influence the function of the business in such a way that the certainty of the business are gone through and business of the firm turn to shut down decision. So today we have discussed the basic economic problem in terms of microeconomics and macroeconomics. Under microeconomics, we seen that demand analysis and forecasting, under which demand analysis deals with the behavior of consumer. It studies the nature of consumer preferences and changing determinant of demands. Demand forecasting is a technique of predicting future on the basis of past behavior. Business economics provide the manager with this scientific tool which assists him in forecasting demand. So on here, demand analysis and demand forecasting have to be crucial part. Then production and cost analysis. Production theory explains the input-output relationship. Also, production analysis enables the firm to decide the choice of appropriate technology and least cost input-output mix. And cost analysis enables the firm to recognize the behavior of cost with the change in the variable. Then we have seen that inventory management. Here inventory management theory helps the firm to minimize the cost associated with the maintaining of inventory. Market structure and pricing policy. Here it provides the extent of competition. Here it provides the information about the nature and extent of competition, which determine the degree of competition, and strategy to be followed in the market management. Resource allocation, help of advanced tools such as linear programming, which enables the firm to arrive at the best course of action for optimum utilization of resources. Theory of capital and investment. The firm has to carefully evaluate the various investment decisions available with him to allocate capital allocation. Theory of capital investment decision help or support decision making on allocation of scarce capital among competing uses of fund. Profit analysis. It's mostly uncertain due to changes in price and market condition. This theory guides the firm the measurement and management of profit under condition of uncertainty. Risk and uncertainty. It helps the business firm in arriving the efficient decision and formulating plans on the basis of past data, current information, and future prediction. And then we discuss problem or issue with respect to macroeconomics, like type of economic system, stage of business cycle, general trend in national income, employment, prices, etc., government's economic policy, working capital or working of finance or sector and capital market, socio-economic organization, and last, social political environment. So friends, we conclude today's session with the end of this topic. Thank you.